Yeah, so let's talk through that because, Mike, if you look at where Bitcoin has come from, so let's talk about just the TA, the charts versus the fundamentals. So if you look at where Bitcoin came from on this last move, right? So it's up 70% ish. You'd have to go down. It'd be down 50% to go down from the highs on the day of the launch to go down to 30,000. I don't see that happening. Could it happen? Of course, it's Bitcoin. Could we retrace back to 37,000? Absolutely. I think that's absolutely well within the possibility of Bitcoin. But that's just looking at trading, right? So looking at the levels and looking at the support levels. But if you step back and we go to what Dave is talking about, it has been existing as an option on this commodity.
Bitcoin has reversed the bearish trend by surpassing the $43,000 mark, with investors expecting a rate halt from the Federal Reserve in the upcoming session. This upward movement represents a significant recovery for Bitcoin, aligning with predictions in the market. This also reveals a positive response among investors regarding the Federal Open Market Committee's meeting. As Bitcoin undergoes an upward price movement, the focus has turned to the cryptocurrency's capacity to maintain these gains in the upcoming months. But many people still think Bitcoin could continue going down after its recent drop last week. During that time, Bitcoin and other cryptocurrencies lost value, with outflows from the largest spot Bitcoin exchange-traded fund exerting downward pressure on prices. In Scott Melker's recent podcast, James Lavish, a distinguished macro analyst and former hedge fund manager, addresses this concern. He dismisses the possibility of Bitcoin dropping to $30,000, but acknowledges the potential for a retracement to $37,000. The cryptocurrency market struggled in its upward movement because of FUD, causing low trading activity and negative sentiments associated with outflows from the Grayscale Bitcoin Trust, GBTC. However, Lavish's short-term market sentiment remains bullish as he mentions the gradual institutional adoption of Bitcoin. According to him, increasing interest and investment from institutional players could act as a support, preventing a significant price drop. Recently, significant financial institutions and well-known corporations have displayed increased interest in Bitcoin, recognizing it as a legitimate asset class. This represents a shift from the previous doubt and skepticism associated with cryptocurrency. The adoption of Bitcoin by institutions can be explained by various factors, such as the desire for diversifying investment portfolios, seeking assets that don't correlate with traditional investments, and acknowledging Bitcoin's potential as both a store of value and a hedge against inflation. The concept of Bitcoin as digital gold has caught the attention of institutional investors due to its finite supply of 21 million Bitcoins and the decentralized nature of the cryptocurrency. This makes Bitcoin seem like a good option for keeping value, similar to how we see traditional safe haven assets like gold. 19.6 million tokens have been mined, leaving less than 7% for future mining. The scheduled halving of mining rewards every 4 years will further slow down Bitcoin growth in 2029, 2033, and beyond. The final Bitcoin is expected to be mined around 2140, after which mining rewards will come solely from transaction fees. This long-term plan is built into Bitcoin's software, and altering these growth-limiting parameters would require a widespread agreement among stakeholders, making it unlikely, especially if Bitcoin becomes a widely used digital alternative to gold. Let us now look at some clips of the discussion where James Lavish explains his insights regarding the current situation of Bitcoin. As you enjoy the discussion, we encourage you to take a moment to show support. Give the video a thumbs up, share it with your circle, and don't forget to hit subscribe for more insightful content. Your support means a lot, and we hope you find the video enjoyable.
And now we have these new securities that they're traded, settled, they're marketed just like any other stock in the world. So it's just like buying gold in an ETF, except I would argue better, because of the nature of Bitcoin and the ability to see what's actually in the address that ETF manager holds. But so if you just think about that, and we step back with what has happened over the last few weeks, the 2.5 weeks that these things have been trading, or a little less than, we had this massive unlocking of the GBTC. We've all seen it. There's $500 million a day for for almost 2 weeks, and now that's tapering off a little bit. We'll see if that continues to taper off. I think it will. And then on the flip side, of course, we didn't get the institutional adoption instantaneously. That takes a little bit of time. But as we do see the institutions lean into this, you have a little bit of education around it, people are looking for something that is the next, that they are looking for that digital gold. And as they get to the understanding around it, that's the key. And that's going to take time. But I think that just snowballs. Does it become this God candle event? It could, if liquidity dries up completely. You could have this massive candle, but I think it's more of a consistent set of candles upwards over the period of the next few months that really drives this price higher, because of that institutional understanding and broad adoption with people who just don't understand how to buy it off an exchange and have your own wallet or signing device and managing the keys. Like, that's just too much for most people.
Yeah.
And I know
James,
that
go ahead. Sorry.
Yeah,
please.
Bitcoiners, they rail against people about this, but investors are not. They don't expect to have to deal with things like that. They expect to have to be able to just buy and settle it with a broker like a normal thing. And if it's abnormal, it scares them. So this makes it normal to them, and it's going to drive adoption, in my opinion.
Meanwhile, according to the former crypto lead at ARK Invest, Chris Berniska, Bitcoin could fall back to the mid-20,000 area. According to him, the local bottom for Bitcoin has yet to be hit. In his analysis, Berniski provides a cautious outlook on the short-term trajectory of Bitcoin, suggesting a potential drop to the $30,000 to $36,000 range, with the possibility of testing the mid-high 20,000s. Despite this near-term bearish sentiment, Berniski remains optimistic about an eventual move toward a new all-time high for Bitcoin. He advises patience and caution, acknowledging the volatility in the path to this anticipated movement, warning about potential false signals or fake-outs, and highlighting that the process will likely take months to unfold. While Chris Berniska is concerned about changes in Bitcoin's value and the overall economic situation, he maintains a strong belief in the long-term success of Bitcoin. Despite the highlighted concerns, Berniski remains optimistic. In this clip, Mike McGlone, senior commodity strategist for Bloomberg Intelligence, shares his insights as a response to Berniski's opinions regarding Bitcoin. For McGlone, $30,000 is a normal pivot point for Bitcoin, and when it was at $50,000, it could be considered expensive.
It would. To me, if you just, one thing sometimes I enjoy doing is, like I said earlier, is just getting back, looking at the chart and trying to ignore fundamentals. And I completely agree with Dave says. I can't not avoid declining supply, increasing demand, adoption. But 30 is just a normal pivot in Bitcoin, and 50 was expensive. We all knew that was seriously silly at 50 because of the reasons. And right now, seems pretty happy and well priced. But it's like, my bent is, I love when people say, oh, it's going to go up into the refunding. I'm like, sure, if the stock market's up, of course it'll go up. They got basically a 3 beta to the S&P 500. Yes, there's iterations in there. And I showed you earlier, if you take Bitcoin since like 2011 on an annual basis, it's like a 65 beta at the S&P 500. It's turning into a mature market. So to me, that's got to change. And I haven't seen any signs whatsoever of it changing its high correlation, high volatility, high beta to the beta that it is. Now, that's why I like to point out, if beta goes down, the first place that probably should be is treasuries, which don't always go down right away in terms of yield, and gold, which doesn't always go down right away in terms of price. But Bitcoin might lead, and so far you could look at it this year as it might be the leading indicator. I look at it versus gold. Gold is, Bitcoin gold ratio has been underperforming beta for 5 years or so. My point, the history that I expect to hopefully live long enough to write and to teach to students is, the all-time high in Bitcoin came with the biggest liquidity pump in history, and the back of this asset was designed to offset everything you talked about. I mean, that's the whole history of Satoshi's Nakamoto's white paper. So the fact is that the high was the biggest liquidity in history, nowhere even comparison to even the big pump in 1929. And the fact is that was the high. Still makes me kind of concerned, like, okay, well, maybe people are and that everybody's so excited about Bitcoin. You look at a normal risk manager, hedge fund, like, I'm going to try to buy what everybody hates and maybe lighting up what everybody loves at the moment. That's my point. Show me the beef.
In the last 24 hours, Bitcoin's price exhibited moderate volatility, fluctuating between $41,735 and $42,479 per unit. Other crypto analysts have shared their insights regarding Bitcoin's current state and how it will play out in the future. Marcus Thielen, former head of research at Matrixport, predicts an upcoming Bitcoin price rally as Wave 5 begins. He anticipates BTC price reclaiming the 50,000 level by the end of this quarter. Marcus Thielen recommends a focus on long positions in Bitcoin, noting that reversal indicators imply a tradable low has been reached. From a risk management perspective, he suggests re-entering long positions once Bitcoin surpasses the $43,000 mark. Despite encountering minor resistance in the $43,000 to $44,000 range, Thielen advocates buying Bitcoin above $43,000. According to the Elliott Wave theory, he asserts that Bitcoin's retrace wave 4 has concluded, initiating impulse wave 5. Thielen also points out potential catalysts for upward momentum in Bitcoin's price, citing decreasing GBTC outflows and Google's support for Bitcoin and crypto ETF advertising starting today. These factors contribute to his positive outlook on Bitcoin's future trajectory. Meanwhile, top crypto analyst Michael van de Poppe predicts that the Bitcoin correction, influenced by the introduction of a spot Bitcoin ETF, has probably ended. He foresees a resurgence in alternative cryptocurrencies, or altcoins, in the next 1 to 2 weeks, coinciding with increased returns in various ecosystems just before Bitcoin reaches new highs. And in a separate analysis, Ali Martinez notes a rise in the number of new Bitcoin addresses, indicating a growing interest among investors. Martinez suggests that many investors have capitalized on the market dip, showcasing a trend of purchasing during these favorable conditions. Another important thing to note would be the upcoming Bitcoin halving. The Bitcoin reward halving set for April 2024 could push the asset to new all-time price highs if the pattern of previous halving repeats. Until now, each time Bitcoin has undergone a halving, a process that reduces the reward for mining new coins, it has consistently resulted in a significant surge in the cryptocurrency's value. For instance, during the first reward cut in 2012, the price of one Bitcoin was merely $12. Within a year, it skyrocketed to an all-time high of $1,170 before experiencing a subsequent decline. Similarly, the 2016 halving saw Bitcoin prices surge from $640 to an impressive $19,650 in just 17 months. The most recent reduction in mining rewards occurred in May 2020, when Bitcoin was valued at $8,600. Over the following 18 months, this price cycle peaked at an impressive $67,500. Analysts, including Scott Melker, are using these historical data to make predictions about the upcoming halving. Based on previous successful cycles, he predicts a potential future price of around $240,000 for Bitcoin in the next cycle. Melker explains the technical aspect of the halving, emphasizing that it occurs when the number of mined blocks reaches a specific threshold, reducing the reward per block. This reduction in supply issuance makes it more challenging for miners to profit from mining Bitcoin. From what we can gather, many investors in the cryptocurrency space are hopeful that the upcoming event in April will follow the historical pattern. Anthony Scaramucci has predicted a price of $170,000, and Standard Chartered considers the halving as a contributing factor to a potential year-end Bitcoin price of $100,000. As we navigate through the many opinions in the crypto space, we'd also like to hear yours. What are your thoughts on the future of Bitcoin? Do you align with the optimistic outlook, or do you share concerns about potential corrections? Let us know in the comments below. Your engagement is valuable to us, and if you enjoyed this discussion, don't forget to like, share, and subscribe for more insightful content. Thank you for joining us, and until next time, happy investing.